Hi there. Today I'm going to do a training on something very basic, and that is that an increase in an asset is a debit. To illustrate this, I'm using the sample company in QuickBooks Online that's available to accountant users called Craig's Design and Landscaping Services. This is training for someone who is very new to QuickBooks Online and maybe new to business as well, but they want to try and do their own accounting. So this is going to be basic cash basis entries that we're going to make, as well as a simple explanation of what is going on behind the scenes as you make these transactions go into your QuickBooks Online in the general ledger. So if we open up the bank feed, there's a few things we'll notice that I want to get out of the way before I dive into the training, and that is that this landscaping company, sample company, is used to illustrate a variety of situations which will help us get training on how to use QuickBooks Online or how to teach other people to use it. So it has the good, the bad, and the ugly. So you'll notice right away that this person is in big trouble. They have a negative checking account balance at their bank. But we're not focusing on that right now. We're also not focusing on all of these matching transactions down here because these indicate that other things have happened behind the scenes prior to the bank feed updating. And I am just discussing today, like I said, simple cash basis entries, which means when you receive money, you recognize it. When you pay money, you recognize it. There's no accounts payable, there's no accounts receivable. This is strictly just somebody gave me money, what do I do with that? I paid somebody money, what do I do with that? And very simply, what is happening behind the scenes in the general ledger as I am posting these transactions. So we're going to ignore everything below these 4 transactions. I'm going to show you that if you can remember that an increase in an asset is a debit, that you can use logic to try and help you figure out what to do with the rest of your transactions as they occur. In these examples, neither of these deposits are income, and you'll see why in a moment. They are actually refunds of payments that were made in the past. And so if you know that an increase in an asset is a debit, then we're already going to know that behind the scenes, when I post these 2 transactions, because my asset account, my checking account is an asset, is going to increase. So these are going to be debits. And if you know anything at all about accounting, also you know that debits have to equal credits. So if we have a debit, then what is the credit on the other side of the equation? So we'll start with this $55 received, $55 from Bessie, Books by Bessie. Now, the reason that I know this isn't income is because I've looked at this before I started the training. And I noticed that Books by Bessie is recognized by QuickBooks. That's why the name is already inside of this drop-down list right here. And when I look at it, they are set up as a vendor. So a vendor is somebody that we typically pay money to for products or services. So why are we getting money from this person? So my hunch is that we had purchased something from Books by Bessie in the past, and they are refunding us because we've given something back, or they've credited us or given us a refund. And sure enough, down here at the bottom on January 22nd, which you guys would have already have posted this long ago. Today, the date of this video, it is March 30th, 2021. So in your books, you would have already have entered this. So I'm going to actually start with this transaction. And we've got Books by Bessie. I'm going to assume this is their bookkeeper. And they paid their bookkeeper $55. So they've got an account for legal and professional fees for bookkeeper. So we're going to add that. But again, I wanted to let you know behind the scenes what is happening here. We are decreasing our asset, right? We have this asset of cash or our checking account, and it's going to be decreased. That means we're going to credit our checking account in this transaction, and we are going to debit the expense account. So let's do that. And now several months later, we see $55 coming into our account. And this is because Books by Bessie has reimbursed us for that payment we made back in January. And when we look at the financials later to see how this shakes out in our balance sheet and in our profit and loss, you will see why they refunded us. But for now, we're going to categorize these transactions, and we know that an increase in an asset is a debit. So we know that when we add this transaction, we will be debiting our checking account, because when we increase the asset, it's a debit. And we're going to credit that very same expense account that we were looking at down below on the January transaction. So we're going to credit that legal bookkeeper account. Okay, so now we have some more transactions here. We have $800 spent on the 7th and $1,200 spent on the 30th. So let's start here. Again, this is A1 rental, which, by the way, I am expanding these transactions so that I can see the detail down below, because you'll notice this says A rental and this says A1 rental. This is the name of the business. And what shows up in the bank detail is always more accurate than what QuickBooks may pull in. So get into the habit of expanding these transactions until you get used to your accounts and your vendors, and you know who people are and you understand how these transactions are happening and why. I would suggest opening and expanding every transaction as you review it. This vendor or customer is not recognized in QuickBooks yet, which means this is the first time that we've seen this person in our books. So we're going to add them, A1 rental. Also, for best practices, when you add a vendor, you should always go into plus details and put in their address, their EIN number or social security number for 1099 purposes, and any other information that you would like at this time now before we proceed. But to keep this more short, and plus I don't have A1's information, we're just going to save this and continue with the transaction entry. So again, we're spending $800, and I'm assuming if we're a landscaping company and we are getting something from A1 rental, we are more than likely renting equipment for a job. So we're going to do equipment rental, job expense equipment rental. So again, let's take a look at behind the scenes. We are spending money, which means we are reducing our asset of our checking account. So an increase in an asset is a debit, remember? So a decrease must be a credit. So then that must mean we are debiting an expense account, and that's exactly what we're doing. Now I'm going to go into this $1,200, and in this bank detail, they give us a little extra information, and they let us know that we are renting a backhoe. So again, it's the same company, A1 Rental. It's also an equipment rental. So this is all set up and good to go. You'll notice that this category or match column has turned green, and that's because we've already entered an A1 rental expense to this account. And so QuickBooks is turning this green to let you know that, hey, we've seen this before and we have a pretty good idea this is what you did. But always review them, because there may be other things that you do with A1 rental that aren't renting equipment. So just keep that in mind as you're reviewing your expenses and your other transactions. But this is correct, so we are going to add it. So now finally, we have $200 coming in from A1 rental. And again, if we open it up and look at the bank detail, it says backhoe deposit refund. So it was either the $800 transaction or possibly the $1,200 transaction. In either case, we overpaid by $200 for this deposit. We're getting the deposit back for one of those pieces of equipment that we rented. And it does tell us this, in this instance, it was the backhoe. So I think that was the $1,200 transaction. So again, we can just put in A1 rental. We've added him to the vendor center, and we are going to reduce the expense account that just was used to pay the expense. Okay. So now we are increasing our asset which is a debit. Remember, an increase in an asset is a debit. So that must mean we're crediting this expense account. So I know that was very limited to a couple of expenses with reimbursements involved, but there are incoming monies for revenue. So let's think about that very quickly. If this was revenue, let's pretend this is not green and it's just money coming in, and you want to do it as a cash basis, and you just want to assign that full $868.15 to revenue from a particular person. This is an increase in in our asset, so we're debiting our bank account. The credit would be income. Okay, so that's the extent of the transaction entry. Let's go look at it on the balance sheet and the profit and loss. So here we have our balance sheet, and we're going to see, after I open it up to this year, because there was that April transaction I want to catch, we'll look at our checking account, and we'll see here, this is why we got the refund, because check it out. We wrote a check number 12, to Books by Bessie back in January, but then we also saw this expense that came through for $55. And that's why we were refunded, because we had already paid Bessie in January. So we paid her again, maybe through an automatic withdrawal out of our checking account, and she got our check and an automatic withdrawal. So in April, she refunded us that $55. So that's us refunding. You'll see this positive number negates one of these extra negative numbers and zeroes it out. So at the end of the day, we've only given Books by Bessie $55 in this expense account. So the other transactions, here's our $800 that we spent. So we're reducing our checking account, which is a credit. Here's our $1,200 spend. So we're reducing our asset, which is a credit. And then here's our increase in our asset, where we're refunded $200. Therefore, an increase in the asset is a debit. So those are those transactions on the balance sheet. We can go over to the profit and loss and see those transactions detailed inside of the expense area. So if I pull this year and we run down to the equipment rental, we can see all the transactions on this side here. We have $800 that we spent, $1,200 that we spent, and $200 that was returned to us. So on the incoming side, a decrease in the asset, which is the checking, that's where the credit is. And here we see the debit. Again, we decreased our checking account by $1,200, which is a credit to the checking account and a debit to the expense account. And here is where we increased our asset because they refunded us $200. So an increase to an asset is a debit. So the corresponding credit is the refund from the expense account. So I hope that makes sense, and I hope that it gives you a little bit of a taste of what is going on behind the scenes as you are processing your transactions, and it gives you a little something to think about as you review other transactions of varying nature in your QuickBooks Online account. And I'll be back later with more trainings for you to dive in and explore more about your QuickBooks Online account. Thanks.